If you are going to understand this exact concept, then you know where to trade. You know where the highest probability price action will be. You know the easiest place to make money. Before we can understand how we actually do that, we need to understand the PD rates that we are using here. And those PD rates are, first off, we have a mitigation block. Then we have a breaker block. Then we have a fair value gap. Then we have an order block. And then we have a swing low. Or of course, if you want to inverse that list, then we have a swing high. Those are the 5 PD rates that we are focused on. You don't need more. And the 3 blocks that we use, which is mitigation block, breaker block, and order block, those blocks, they need to leave behind a fair value gap in order for them to be high probability. Otherwise, we would not use them. Then the next thing we need to go over is premium and discount. A short premium and discount lecture. In price action in the market, in order for there to be a trend, there needs to be one-sided price action, meaning that premium or discount should take over in the market. If we have premium taking over in the market, then we will of course continue lower. If we have discount taking over in the market, then we will of course continue higher. If we have both premium and discount in the market, that is exactly when we will consolidate. When you have both premium and discount in the market, what does that mean? That means, if I draw it on the chart right there, that means that we have premium and discount, which leads to equilibrium, which leads to a consolidation, choppy price action, seek and historic conditions. That is not where you want to be trading. You either want a clear premium or a clear discount. So there only needs to be one participant in the market, either premium or discount, not both. When you only have a premium in the market or only have a discount in the market, you will have a low resistance liquidity run. A low resistance liquidity run just means displacement, just means fast price action. How fast can price deliver towards our draw on liquidity? And it's already in the name, low resistance versus high resistance. If there's low resistance or your trade is going to deliver towards the draw on liquidity very fast. Because it's in the name, there's low resistance. Let's define that. What is that low resistance? What is that resistance part? That resistance part is PD arrays. Let's define PD arrays. What is PD arrays? PD arrays is premium and discount arrays. So when you want to look for lower prices, aka you want to look for a premium array to trade off of, then in order for there to be a low resistance run to the downside, to your target, so a fast run to your target, there needs to be no discount array holding price back. And that is exactly as well why the silver bullet works so well. Because there's no PD array holding price back anymore. The resistance in the high resistance liquidity run and low resistance liquidity run is just PD arrays. If you're looking for higher prices, which premium array is holding price back from reaching that target? All right, here we start on New Zealand dollar, US dollar. And what we've been talking about is the monthly time frame, because the monthly time frame actually came into this fair value gap that is sitting right there. That fair value gap is, of course, in itself already a premium array. That fair value gap, aka the premium array, can do what? It can push price lower towards the next discount array, which is, of course, just that monthly low, the previous monthly low that is sitting right there. In between that premium array and that discount array right there, is there any monthly discount array in this area, in that area right there, withholding price from reaching that discount array? No. Which means that the first place where price will encounter a discount array is that low right there. Which means that on the monthly time frame, there's nothing withholding price from reaching that discount array. There's no resistance, which is a low resistance liquidity run. Now, if we go into the weekly time frame, then we can see that even on the weekly time frame, we don't have any discount arrays withholding price on the weekly as well, which is very interesting, which is of course another confluence. That is another argument for us to trade this pair here. Then if we go into the daily time frame, even on the daily time frame, there is no fair value gaps going higher, which automatically leads to there's no valid discount array in this whole price action section right there, which automatically means that there's nothing holding price back from running to that low very fast right there. So what can we say? Price is in agreement. Then what is the next thing that needs to agree? Time. Why did we see that huge move right there? Because time and price was in alignment. Why did price allow time to drop that heavily on that spike right there? That is because first off, we have the monthly context. But second of all, that monthly context is nice. The most important part is that we have no discount array in this leg higher withholding price from dropping towards that context low. There's no resistance. And now we went into the weekly and the daily even, and that is again just an extra confluence. The main thing I need you to understand is that on the context time frame itself, there should be no discount array withholding price. Meaning that on the monthly time frame, we saw no discount array withholding price. That is exactly what you would want to see. Weekly and daily, every time frame below it is just an extra confluence. Don't go beneath the 4 hour. So this right here, if we're coming off the monthly context and we dive into the daily time frame again, then on the daily time frame, we can exactly see that here we have this daily fair value gap sitting right there, which we talked about in the daily forecast, that can push price lower. If it wants to continue lower, that daily fair value gap will be responsible for the push lower. Until, of course, we create this weekly fair value gap that is sitting above it right there. But that is another discussion. That is what we'll go over tomorrow in the weekly forecast. Then on the daily, we can see daily fair value gap overlapping what? Overlapping lows. That is your mitigation block. With that fair value gap, that is what? That is your premium array. What is the first discount array that we can deliver towards? That low right there. So in between this price action from that premium array to that discount array, is there anything on the daily time frame withholding price? Is there any resistance? And again, resistance defined by, is there any discount array? Because we have bearish context. So is there any discount array withholding price from reaching that context low, reaching our target? No. Perfect. That means that we have a low resistance liquidity run. If we have time agreeing as well. And what do we see? We also have time agreeing. And right there, feel free to send me your case study on how you would have capitalized on this move from that premium array to that discount array. Now, the thing that we also need to touch on, we don't have a fair value gap lower in that leg. Fair value gap is telling us a story. We might continue higher. Do we want to look for a trade higher right now? No. Why is that? Well, for a low resistance liquidity run, yes, the first part is there, where we don't have a premium array withholding price right there. So the first target is that high right there, which I do think price can deliver towards. The only thing is we don't have a discount array here on the daily time frame. So that already has no context. And then the second thing is, of course, overall we're bearish. Now, why is that important that overall we're bearish? Because if the monthly is coming off of this monthly fair value gap right there, then the fair value gap is telling us a story. What should price do in order for us to continue lower off that monthly fair value gap right there? Then price right here, this candle will be your expansion phase of the fair value gap. Meaning that the next candle will also likely be bearish or at least a consolidation, but not a bullish candle if it wants to continue lower, because that creates your fair value gap. Then this area right there would be your fair value gap, meaning that overall we are still bearish. And this is what a lot of people overlook. Just because on the lower time frame we might have some bullish indications doesn't mean that we are bullish. Reason for that is because on the higher time frame we are creating bearish fair value gaps. So price is still in that momentum of creating bearish fair value gaps. So there is still bearish intention. All right, so here we are on NASDAQ. Again, NASDAQ, Forex, whichever market, all the concepts I'm teaching here work on every single market. Then right here, what we are seeing is that we had this fair value gap on the monthly time frame. We also had this overlapping high. And if you've been following along with the videos, that has been our target for a very long time right now, which this week perfectly got hit. So if I take you back to old videos, what was the first sign that we were continuing towards that overlapping high? Again, we had this first fair value gap. If it wants to continue higher, it should continue higher off of that first fair value gap or the overlapping part right there. Because this is one, and this right there, that area, that fair value gap between the overlapping high, that is also one. So it will not continue higher off of that. It will reach for the overlapping part. So if we know that, then the only major area that we will see where price will have a chance of pushing higher is that first fair value gap right there, aka your first reversal area. Now, why is that area important? Because if we do want to reach for that overlapping part and on the daily time frame, etc., on the weekly, we will come into that monthly fair value gap, which is just a discount array. Then if we zoom into the weekly time frame, we can see that right here, the biggest retracements happen once we come into that monthly fair value gap and we struggle to immediately continue lower and we consolidate for a while. Why is that? Well, we have a premium and a discount both in the market, which is even more clearly visible on the daily time frame right there. Where at this moment in time, and especially in this moment right there, those are choppy conditions. And again, why is that? That is, and that was because that first reversal area is where we are stuck between that premium and a discount, which creates equilibrium, which creates consolidation, choppy price action, seeking short conditions. Then the thing you wait for is either fair value gap higher or a fair value gap lower. And once we follow through on that, in other words, the fair value gap is telling us a story, then again we can look to trade. But very early on, if you know how to read the fair value gaps, which we mentioned in the video, then we can already tell right there by how we react towards that fair value gap right there with that order block. This does not create a new fair value gap, which means that the lack of fair value gaps being created higher right there tells us that it does not want to trade higher. There's a lack of intention higher, which automatically means that this month fair value gap is also likely low probability. Reason for that, because this is not following through right there. Bearish fair value gaps, next target is that low right there. But even the next target is that overlapping part, which we talked about right there. Then what can we see if we digest price action right here? We had the bigger retracement. The bigger retracement happened. Why? Because we're in between that discount and that premium area right there. Then afterwards, we also have kind of a bigger retracement, but a less bigger retracement. Why is that? Because now premium is for 75% in control, where discount only has 25%. And then afterwards, we see again lower prices. And then now we have a small retracement. And then afterwards, we even have a smaller retracement until we reach the target right there, which is something we will dive into on the 4 hour. And I will show you exactly what I mentioned during the Discord live streams during that time. So what can we see? The closer we get towards that drawn liquidity, the smaller the retracements get. And why is that important? Because then we are not stuck waiting for a huge retracement to happen. Whilst we know that if price is close to drawn liquidity, there's still a target to the downside right there. The retracements eventually will not be hefty anymore. There will not be big retracements anymore. So you either get involved right there or you get left behind trying to chase price. And why is that? Because overall, we have offered fair value already. So price doesn't need to make a big retracements to then continue lower. So it has this small sting into the fair value gap and then boom, continues lower. Very fast. And why is that as well? Because price has no discount arrays withholding price anymore. Because if we look at this area right there, these expansion candles right there that we are seeing, why did they happen so quick? Well, we likely had news supporting the ID, so we had time in agreement. But as well, next thing is that we were already disrespecting this fair value gap, disrespecting this order block right there. There was no discount array withholding price from reaching that swing low right there and that swing low, which is why it happens very fast, which is also the area where your silver bullet happens. Then afterwards, we see the same thing. We have kind of a bigger retracement, we could argue. Then here we have some order blocks, some fair value gaps right there. Now, the fair value gap that we are seeing is right there. And we have a fair value gap right there. Where are we seeing the resistance? The resistance is at that first fair value gap and that second fair value gap. After that, we have easy-going price action towards these swing lows that are sitting right there. Now, why is that? There's just no resistance until we reach those discount arrays right there. Then afterwards, we see this fair value gap, which we talked about in the weekly forecast. We want to see lower prices off of that right there. And we can see now why it delivers very fast. We know that there's nothing withholding price from reaching that low and from now reaching that drawn liquidity, reaching that overlapping monthly high. So if we go into the 4 hour, then we can actually see that we had this fair value gap right there and even had that gap right there. Now, since the same theory, I would call it just the simple facts, that the retracements will become smaller and smaller and we will drop lower faster when we are closer towards that drawn liquidity right there. We know that once this happens right there, we are right there on a Thursday, 2 a.m. candle, we are not expecting a huge retracement to happen at equities open. So if we go into the 1 hour right there, then what are we seeing here? We are having that first bullish fair value gap that is sitting right there. A very small bullish fair value gap on the 1 hour. Then what is the next thing we are seeing? We are coming into that and we are doing what? Not creating a new 1 hour bullish fair value gap off of that. And if we compare that to ES, then ES on the same piece of price action right here has this bullish fair value gap that is sitting right there. So now let's stack up the arguments. Let's see which trade do we want to take. And this is exactly what I did in the Discord live stream. ES has a bullish fair value gap higher right there. ES has already reached quite some targets on the monthly time frame as well right there, meaning that Nasdaq still has the easier target, less resistance to continue lower. That's two arguments, which starts on the higher time frame. First one, Nasdaq, if we compare to ES right here, compared to Nasdaq still has the clear, easy draw on liquidity. There's still downside potential. There's no resistance to deliver towards that overlapping high. Then the second one is that Nasdaq doesn't have that fair value gap higher, where ES did have that fair value gap higher on the 1 hour time frame. Which means that if we go into the 15-minute time frame and we look for premium array, then here on Nasdaq, we see this fair value gap being created right there. That fair value gap doesn't have any resistance. As in, there's no discount arrays withholding price from delivering towards that low. The only one is that low right there. But once that low gets taken, and we can see already after that the retracement happens. So in this area right there, there is no discount arrays to worry about, which is why price will now want to explode lower. So if we stack up the arguments right there and we compare this to ES, then ES we also have this 15-minute fair value gap, the same exact 15-minute fair value gap, but if we again zoom out on the 1 hour, then we saw that 1 hour bullish fair value gap, which means on a 15-minute time frame, we have this 1 hour fair value gap, that 15-minute fair value gap, which is why we are seeing this sting into the fair value gap. It is almost telling us it wants to continue lower right there. And then all of a sudden we have a huge retracement into this up candle right there. Then why did that happen? Because ES had resistance right there. So if we're stacking up the arguments, and again, that stacking up the arguments, that is an objective way of getting to your trade ID, of getting to your daily buys, because you can do this for every time frame. And this is exactly what we will go over in the next video, where you can get to your daily buys in a fully objective manner. So this right here, Nasdaq had the clear drawn liquidity. Nasdaq doesn't have that resistance. So Nasdaq is the one you want to be trading. And this is how you can get to the highest probability pair to trade. And on Nasdaq, we can see why this had the beautiful delivery. And that is why the fair value gaps that are in your favor and against your favor, because even the fair value gaps here are telling you a story, right? That this 15-minute fair value gap, we first tried to expand higher. What did it do? It got disrespected by a bearish fair value gap. That bearish fair value gap is now your higher probability fair value gap. In context, no resistance. This is super high probability. No resistance meaning that we just count the discount arrays that are potentially withholding price from reaching our target. How many discount arrays in bearish context are there to withhold price from reaching that target? Well, on ES, we had a 1 hour fair value gap. On NASDAQ, we didn't see that 1 hour fair value gap, which automatically means ES has more resistance. So if we compare those two, then which one offers the low resistance liquidity run? In other words, the highest probability instrument to trade, that would be NASDAQ. And that is an objective way of getting to your instrument that you want to trade, of getting to that daily bias. Then combine this with the right time. And this is a money-making machine. Fair value gap plus no resistance equals money-making machine. Feel free to send me your case studies on how you would have gotten involved from that 15-minute fair value gap towards those lows right there and towards eventually the monthly target that we had. How would you have gotten involved right there? And be reasonable. Use your 1 minute, 2 high probability lags, and your 5-minute ST. Send me your case studies. And if you have any inquiries about the mentorship, then feel free to reach out to me at info@ario.io. And then, of course, I will see you tomorrow. All right, perfect. Thank you.